See, markets are markets. They sometimes surprise you and they sometimes tell you what's coming next. So I'm not at all surprised with what's happening in the small cap index. 10% decline, it may look very compressed, but this is something which I guess I told you so. The selling in the small and mid cap stocks is nothing else but mean reversion when excesses they got created. And my sense is that the excesses in the small and the mid cap stocks are not going to reverse in any kind of a hurry. So I've been sticking my neck out and maintaining a view that go lazy in large cap, be choosy in mid cap, and avoid the frenzy in mid cap, in small cap stocks. I think you should still maintain that. Large cap stocks, you look at the Nifty, you look at the market from the prism of Nifty 50 stocks, there is no problem whatsoever. That end of the market which is dominated by institutional investors, that end of the market which is dominated by largely FI investors, that is in fine shape because stocks are cheap, flows are strong, and growth I think is visible. Small and mid cap stocks is where there were leverage, and not even mid cap but small cap largely, where leverage was at play. Prices were completely out of whack. There was only liquidity. Everybody was, in a sense, trying to catch them for price action, not for fundamental factors. That tide seems to be reversing. And when typically a tide like this reverses, I think there would be some pain in the near term. Yesterday's price action in variety of small cap stocks, look at the decline there. Can we go back to that graph, please? Look at, let's say, yesterday's price action. IFL Finance 34%, Agrotech Food 30%. We are talking about like almost a 15-day change. Gensol Engineering 28%, JP Associates. So I'm not surprised with the brutality of the fall. But my only submission, my only request and my only appeal would be that don't buy the fall. You should not buy the fall in small and mid cap stocks because when the tide turns, it is going to be a painful kind of an price action. See, the market, I always say they move like a pendulum. The pendulum of market sentiment in small and mid cap stocks had moved to extreme participation, and it almost had become like I won't use the word casino, but it had almost become like too real to be untrue. Yeah. That excess has to come down, and I think the process has started.
Yep, and in light of that, do remember just recently we had the capital market regulator SEBI, which had asked mutual funds to conduct the stress tests in their mid and small cap funds. You have the latest news as well coming out that ICICI Prudential has gone ahead and suspended fresh purchases in 2 mutual funds. They have said that this is going to be temporarily in terms of suspension, and they will be allowing fresh purchases via an SIP with a limit, Nikunj, of 2 lakhs a month.
I'm not at all surprised. I think they're not the first house who's done that. There are other AMCs who've also done that. And I think this is very, very logical. I guess there is very little value in small cap stocks as an index. And the fund manager, in a sense, is aware of the fact that if you have a mandate to invest and remain fully invested, if you're getting fresh inflows in a sense now, they will move back into the small cap stocks. You have a situation of too much of money chasing few stocks, and that is leading to price going higher. What AMCs and the regulator is trying to perhaps do is that the AMCs in a sense are not comfortable with investing in some of these small cap stocks at these levels. So they are in a sense saying that, look, we will not take fresh money. The regulator is insisting that all AMCs, they should be doing stress test and they should be preparing the portfolios for any kind of an eventuality. I think that is something which is need of the hour. Now the challenge is that when the sudden flows into small and mid cap stocks, which was almost going up like a herd, if that flow reverses, then are we staring at more downside in the near term? It may well happen because the large function of the price action in small and mid cap stocks was because of flows which were coming, not because of fundamental change in the economy or in the businesses. You will always have some outsized winners in small and mid cap stocks, but they are few and plenty. Not everything deserves to go higher. So that is what I think the regulator and AMCs are trying to do. So this entire process of adjustment will come at a price. So there would be price-wise correction and there will be time-wise correction. Price-wise correction has started. Anyone's guess whether it will be more or not. But I think time-wise correction is real to stay. I don't think we are nowhere close to what could be called as value in small and small cap stocks and especially SMEs now.